Hello traders, it's Wednesday, April 29th at 4:18 a.m. All right, two stocks for you. We've got to trade today. We've got Hood. So Robinhood, whatever the earnings were, didn't even look. The market didn't like it, but we could see that setup coming. And then we've got Bloom Energy, which is on fire, especially the need for data center energy. So that one took off as well. Let's review here, starting with Hood. Largest trades in the last month. We can see this right here at the bottom, 1.5 million, April 10th. We had this on the doji, and then we had a bullish engulfing here through the print closing. Wasn't a lot of volume, but look at that, no wick on top. Moved up more prints, moved up more prints. Now this is interesting here. At the top, there's all of these prints here right at my 200 moving average. And then we started moving back through them. So this pulled back here right before earnings. And so this one here opened, tested the print. So opened, moved down, up, tested the print, and closed, testing the 4 exponential moving average on the downside. And then we're below all of these prints. Then we have earnings, and then this one is down, what is it, $8 at the moment, pre-market, and the ATR is 444. So let's have a look at it this way. This could be a target 68, but I'm going to go back 60 days and see where the other prints are. So this gives us a little more perspective here on the, because this is the top 10 largest trades in the last 60 days. So when we're coming back down here, you can see this consolidation back here. We could 72 area, 72.32, 71, and 68.90 are all levels here where the institutions were in before. These could be targets as well. Okay, so let's go with this. We're going to be bullish above 75.12. Let's get above there, and then we're going to go to 76, 77, 37. So we've got some prints here in the 50. So we want this 50 simple moving average. We want this S4 to actually hold. So we want to bounce up here, hold this print, and then move up. 77.37 is S3. 78, 79, 79, 69 is S2. And this is also pretty much to the penny my 200 simple moving average. And then there's the 200 exponential right there. But this to me on the retracement would be not bad with the ATR. On the downside, we're going to be bearish below 74. Look, we tested that. We tested 74. This was the pre-market or the post-market run here. We just kind of leveled out. You could see that 650, whatever. This is support here, 74 levels. So 72.32 is S5. Sorry, 72.73, 72.32 is this 1.5 million, 70.89, 68.90 is a 1.5 million. Down here, 68, 67, 65. We've got that if that continues on the downside there. All right, let's go and check out Bloom Energy. So here's Bloom Energy. This one's interesting. So we've got the last, this is from March. Yeah, the last 60 days here. Look at this. We've got these prints here. Look at 900,000, 200, 900, 1.7 million. So you have this consolidation here. That's what the dark pools usually do. You have this, we pulled back, and then we started moving through the prints again. So where is our entry? Well, we've got this moving through the prints and increasing volume here. So that very little wick on top. You could wait for that. You're still in the middle of prints, but look how long it took, this few weeks. This might be a better entry closing above the prints, no wick on top at all. This would be the safer trade. We gapped up, then we had more prints. We gapped up, had a print on this day, tested it, moved up. The next day, opened, tested it, moved up. The 4 and the 8 are moving. Then the day before, this one opened, tested the print, closed, massive volume, and now we're off to the races. This is how the institutions actually do it. They pull it back to get more. Or they, on the downside, like we saw, they'll come up to test the print and move lower and push off. So that's where the larger trades are their positions that they're trying to that they're trying to either protect or defend, or that's where they're in, right? So they want to defend those levels. So we're going to be bullish above, oh dear, 260. I was talking, so I was looking at this right about here. So 260, it's almost at my first target, which was 260.250. So let's see what actually happens here. So what we'll do is 260.250 will be the first target. It's already gone through my first one, 260, but then 265, 270, 274.48 is R3. Then I've got 280, 285, 290. Now the ATR on this one is $16. We're already up 34, so that's pretty decent. We're going to be bearish below 255. Let's get below here. Target 254, 252.50. Then we've got 251.07 and 250.91, which is an R2. I'm going to call this together. It's not, it's like 20 cents or something. It's not a lot. And this is support here, my 50 simple moving average as well. So that's a tight one. 247.50, 245, and then 240. Here is the retracement to the 4 exponential moving average on the daily. And if we look at the higher time frame, that's actually support. If we pulled back to here and started moving up, that's a good buy the dip scenario. Okay, there you have it. Those are your 2 trade setups for today. So please like, share, subscribe, leave some comments in the comment section below, and subscribe to our weekly dark pool report newsletter, mobyticktrading.com/weekly-report, where we do swing trades, talk about the dark pools, learn about that, and we have a rolling scorecard, see how we're doing week over week, which we're doing well. So happy trading, everyone, and we'll see you tomorrow with all new trade setups. Take care. MobyTick has partnered with TrendSpider to bring real-time institutional trades to your charts. Click the link in the description below for more details.